commitment to the community. Thanks so much for being with us, Philip.
Thank you, Meredith. Good afternoon, everyone. I'm Philip Henry, Community and Economic Development Program Officer for Fifth Third Bank. And once again, thank you for joining today's webinar, Reopening Your Business During Uncertain Economic Times, our fourth small business webinar of 2020 in partnership with Accion. Our commitment to put business customers at the center of everything we do is a driving force behind our ongoing collaboration and partnership with Accion. Together, we share a common goal, and that's helping entrepreneurs overcome barriers and achieve business growth by expanding access to capital and educational resources. Fifth Third Bank, in collaboration with the National Community Reinvestment Coalition, made a commitment to invest $32 billion in the communities that we serve through 2020. The plan was originally announced as a $27.5 billion commitment in February of 2016. It expanded to $30 billion in November of 2016 and expanded once again in October of 2018 to $32 billion to reflect Fifth Third's expansion into the greater Chicago area. We are making great progress on that commitment with significant help and engagement with community and business partner organizations such as Accion. As you can see from the slide, we have almost completed the 5-year plan, with $31.2 billion in lending and investments to improve lives in low and moderate income communities throughout our 10-state footprint. We've committed $13.1 billion in mortgage lending, $8.2 billion in small business lending, and $8.7 billion in community development lending and investments. Fifth Third Bank is committed to all of the markets that we serve. Several hundred entrepreneurs have been helped through our support of economic development programs, including technical assistance and micro lending for small businesses through partners like Accion. If you're launching your business or expanding it, our team at Fifth Third and our resources are available to you every step of the way. Please visit our Business Resource Center at 53.com and let us help you meet your financial goals and assist you with smart financial solutions for both your personal and business needs. Thank you, and back to you, Meredith.
Thanks so much, Philip. We are so grateful to have excellent partners like Fifth Third Bank on our side as we support small business owners. So we appreciate that for sure. So now we are going to turn to today's discussion about our current economic situation and what that means for your business. As I mentioned a couple of minutes ago, we've got two fantastic speakers with us from Fifth Third Bank today. Tom Jalix and Kala Gibson will be speaking with us here today. Thank you both for being with us very much. So I guess we should just jump right into the meat of this conversation. Let's dive into our first discussion point here. Tom, can you please talk us through the economic changes our country has seen so far this year?
Of course. Meredith, thanks so much for the invite, and thanks to all the attendees for taking the time to spend with us today. For my day job at Fifth Third Bank, I am a chief market strategist. That's just a fancy title. Where I lead a group of investment professionals, and it's our job to make investment recommendations on behalf of our clients. And we found that if we correctly identify what phase of the business cycle that we are in, we'll make, and be correct, we'll make fewer investment fewer errors on behalf of our clients. We'll keep our clients happy. We'll grow their investments over time. And frankly, we'll do well for ourselves as well. And so typically, it sounds like an easy job, but it's a little bit harder than it sounds, getting the exact kind of phase of the business cycle we're in. I'll tell you today, it's quite easy. We are in a recession. This recession probably started in the middle of March. It's going on today. And our view on the economy domestically is that this is more of a garden variety recession. Our view is that it's going to be nasty, it's going to be brutish, but it's going to be hopefully relatively short. And short, we view kind of the downturn in weeks, months, and potentially a couple quarters, but we don't see this as a really harsh downturn like we saw in 2008 or 2009, or certainly anything in the 1970s, or even going back to the Great Depression. And a couple of reasons why we think that is our economy was really functioning quite well coming in to 2020. In December, January, and even the first couple of weeks in February, our economy had actually been picking up steam. We saw tremendous forward movement in several parts of our economy. The domestic housing market was improving, manufacturing was improving. The unemployment rate was at about 3.5, 3.6%. That was the lowest unemployment rate in 50 years. And we are a consumer-based economy in the United States. About 68% of our economy is driven by people who have jobs or business owners who earn profits and then spend those wages or those profits. So we came into this from a period of strength. That doesn't mean we're not going to see a nasty downturn. We're seeing it right now. That unemployment rate that I mentioned, we started at about 3.5, 3.6% in February. Through the end of April, we jumped all the way up to 14.7%. Now we're down a little bit after some better news in May to 13.3%. But again, to put that number into perspective, that mid double digits unemployment rate, you have to go back to the 1940s in the United States to see an unemployment rate that high. So this is the nasty and the brutish part of the economy. Why we think it's going to be relatively short, again, measured, let's call it months and maybe a couple quarters, is that we didn't see the typical slowdown in the economy coming into the recession. And typically that happens after years of malinvestment in one area of the economy, or if there's speculative excesses on the part of investors, or frankly, if the banking system is having massive challenges. And none of those preconditions are evident today. Typically when those three things are kind of out there, whether it's a banking crisis or whether you have malinvestment like the run up to the housing crisis last decade, you see many quarters and potentially many years of a downturn. And because we didn't have these excesses or these speculative risks, we think that the downturn can be relatively short. We're not going to sugarcoat it. It's nasty. We're seeing that now. There's certainly additional uncertainties out there with the tracking of the virus. Cases certainly have been going up. That's the bad news as we've kind of reopened our economy. Still hospitalizations and mortality is way down from the peaks in March, April, and the beginning of May. So that's the good news. But it is certainly a big risk that will hamper the growth of our economy. So let me stop and answer the question this way. Our view was that in March, our economy was strong. Our government, for the health reasons that was evident and necessary, turned off our economy like a light switch. We basically went from on to off in March. And after learning more about the virus, we did not overwhelm the hospital systems. We are starting to open up our economy, as we've seen in mid to late May and most of June here. But we're going to be turning on this economy in fits and starts. So while the turning off was a light switch, we believe that the turning on of the economy is going to be more like a garden hose. And you're going to have to turn that garden hose nozzle 3 or 4 times before we're back up to fully functioning. We think that first quarter turn is taking place now, and we're going to need to track the course of the virus before that second, third, and fourth quarter turns are happening. So that's where we are today. We do think it is going to be relatively short. We don't see the overhangs like we saw in 08 or 09 or in the 1970s, or certainly in the 1930s with the Great Depression, but we don't want to sugarcoat it either. We're going through a very difficult time, certainly from an employment standpoint in the United States.
Mm-hmm. I think that's really helpful, particularly for somebody like me who's not an economist, to have the metaphors. The light switch I think is really helpful, and the garden hose that we're hoping to see now. Anything else to kind of add in terms of the snapshot of what we're seeing now to the garden hose, or what we can look for this summer as we kind of hopefully can get moving again in a safe way?
From an economic perspective, I kind of mentioned that unemployment rate. So we started the year at, the mid 3s. Again, that was the lowest unemployment rate we've seen since December of 1969. That was, again, why we believe that we came into this, brutish downturn from a position of strength. Through the end of April, that 3.6% turned, as I mentioned, to about 14.7%. And then we got a little bit of good news last month in May, and some jobs came back, and the unemployment rate actually ticked down from 14.7 to 13.3. Our expectation is if the garden hose continues to take these quarter turns, we're going to see the unemployment rate slowly trickle down. Now, it's going to be a slow grind. We certainly don't expect to see those levels that we witnessed at the beginning of 2020 happen until late 2021 or more likely 2022, but we're going to see additional job gains rather than job losses as we move through the summer into the fall in the third and fourth quarter. And that's kind of something that we're really looking forward to seeing, to suggest that the economy is rebounding. So again, when you have an economy like ours in the United States that's driven by consumer spending, it's 68% of our economy of US GDP is driven by consumer spending. That jobs number is critical, and we do think it's going to improve from here, but it's going to be in fits and starts, and it's really going to be driven by the success that the country has in fighting the virus, if that makes sense.
Mm-hmm. I think it does make sense, for sure. So thank you for helping us think through how the economy is doing. And now we'll talk about what that means for small business. So Kala, can you help us think through how businesses can respond to this current economy? What strategies can you share with us or insights for today?
Yes, no, thank you for having me on as well. Really exciting to have the opportunity to partner with Accion, and particularly partner in this way. I think that information is so critical at this time. As Tom mentioned, we're 100% in a crisis, right, with our country. And I think that, one of my favorite quotes, and I don't know if this came from Rahm Emanuel, if it was his original quote, but I've heard him say this several times, which is never let a good crisis go to waste. And I think that's the opportunity that we have as small business owners and entrepreneurs right now. So my job, so I run business banking for Fifth Third, and that's the segment that's $20 million in revenue, companies and below. So again, your small to medium-sized businesses. So I do have the opportunity to talk to a lot of small businesses throughout our 10-state footprint and kind of hear what some of their challenges are. And they're pretty much the same, which is that there's a lot of uncertainty, as Tom had mentioned, on when do I reopen? And if my area is not ready to reopen, how do I continue to survive this? And how do I actually come out stronger? So let me just give a couple really quick tips. So during this crisis, one of the things that we've seen is probably one of the biggest stimulus packages in recent time, particularly as it relates to businesses with the Paycheck Protection Program and other SBA programs that were provided starting in March. Now, I think we all can agree on the phone that it was incredibly bumpy at the beginning. There wasn't a lot of information, and it was very difficult for small businesses, particularly minority and women-owned businesses, actually to get the information that they needed to be able to apply for these loans. And the one thing that we found out and saw that all of the folks who weren't able to get access to this money, the one thing that they had in common was that they didn't have a relationship with a bank or with a banker. And, I would talk to the small business owners and they would say, well, I thought I had a relationship because I actually had an account there, right? And I had a relationship with the CSR or the teller or someone at the branch, but it really wasn't that relationship, what I would call a banker relationship. So when the money was available for PPP and other programs, you had to have a relationship with a banker. So my number one suggestion now and going forward is to make sure that you have a relationship with a banker. Obviously, I'm biased towards Fifth Third Bank, so a banker at Fifth Third Bank, but I would tell you, just as an individual who cares about small businesses, doesn't matter which bank, just have one. And I would also add to have multiple relationships and multiple banks, because again, in this situation, we saw people getting in lines at some of the larger banks, and it was a challenge to get through that line, right? So get a relationship with a banker. It's free. They give you free advice as well. So, some companies have accountants and attorneys that they work with. As small business owners, sometimes that's difficult to have those folks on a retainer, but the good news about a banker is that they're always on retainer and you don't have to pay for it. And they can be a wealth of information as it relates to programs through the SBA or just programs in general that their bank offers. So an example, Fifth Third offered a small business payment deferral program up to 90 days. Those are things that unless you have a relationship, and most of the banks offer the same thing, you wouldn't know. So that's number one, the most critical thing. Talk to a banker, have a relationship, have multiple relationships, because again, the information that they provide and the access is going to be critical as you start to look at your balance sheet and maintain liquidity, which I'll talk about in a second. So understanding your numbers. The other piece that was shocking to me, again, as this money was starting to flow in from the federal government, and more money is going to continue to flow in too. So there's going to be other packages either at the federal level or at the local level. So everyone has to be prepared for that. But the second thing that I realized was that everyone didn't have a good understanding of their numbers. So again, in the case of the Paycheck Protection Program, it was having information as it pertains to your payroll or what information you are going to need to bring. So again, it's really, really important to fully understand your numbers, take stock of where you are with debt and your vendors, and take a really good look at your liquidity position. Because right now, if you're a small business and you have a significant amount of debt on your balance sheet, there's going to be some challenges over the next 6 to 12 months and maybe even sooner, just because of the uncertainty of businesses coming back. But if you have liquidity, and liquidity is what some of these programs are providing, it can help you kind of manage your way through this process, right? Which again could be fairly long. Now, as Tyler mentioned, it shouldn't be as deep as 2008 and 2009. Again, I'm knocking on wood or for Micah here. So it should come back fairly quickly, and the idea is going to be that you're prepared when it does come back, right? So that you get your people back, or if you're an independent contractor, all of your jobs and things are lined up so that when it's go time, you're ready to go. So that's the second thing. A couple other things. Let's talk about the customer, right? And keeping your customer at the center. Something that we try to pride ourselves on at Fifth Third as well is that, so many of your customers, back to Tom's point around unemployment, that there's a struggle right now for a lot of folks just to make ends meet. And being creative on how you can service your customers and help them during this tough time, they'll remember that. And when things come back, you're going to have an even more loyal customer. So, for example, one small business, a distillery that we helped in Bloomington, Indiana, that they really reached out to their customers and offered, again, this was in the early period, around carry out and different ways of being able to get food, in this case beer, which I think is important during this time as well, to their customers, right? And it really helped because, again, as they started to come back again, these customers started to feel really good about the fact that, that during this tough period, that there was an opportunity for them to actually reach out. There's been opportunities where you can offer discounts to customers as well. And I know cash flow is tight, but it actually helps out in the long run, again, because these are individuals who have been shopping at your store and has been loyal. And again, once the economy starts to come back and unemployment starts to get back to a healthier level, these folks are going to come back. The last two things, which I think is really critical, and this is almost back to the distillery idea as well, it's around being innovative and agile. Again, we're in a place that none of us has experienced, at least not since the 1920s. And so it's tough, and we're all trying to figure this out. And so one of the things that I've always try to stress with small businesses in times of uncertainty and when it's volatile is to be innovative, but most importantly, be agile. Don't make any big bets right now. This is not the time to make huge bets on something because, again, we don't know how this thing is going to turn. It can turn quickly for us, and the economy is back roaring right in the third quarter, which is what we're seeing some numbers. But again, there's the fear out there of a second wave or a continuation of the first wave that could actually postpone that. Either way, you have to be ready, and you have to have your business in a place, again, that you can move quickly and pivot, right? I'll give you some more examples of, here in Cincinnati where I'm located, that, there's been, again, breweries or places that offer in-house dining, right? That they actually move to more of a carry out and even a delivery system, right, that they didn't have before. Those are things that I'm hoping that they continue to use, right? Because again, it's going to help them as it relates to market share and customer experience. And then the last thing, and this is something that I always recommend that small businesses do, is that there also is a need to collaborate and to work together through this, right? There's a lot of opportunities where you can deliver goods and services together and bringing these organizations together, albeit temporarily, could help both organizations get through this tough time. I think there's an opportunity for advocacy right now as well. So again, that's coming together as a small business community and making sure that all of the challenges that we're experiencing are systemic things that have been in place that has hurt small businesses, and particularly women and minority-owned businesses. This is the time for us to come together and to advocate for better programs with the banks, as well as SBA, to make sure that there's full access to the capital that's flowing into to the marketplace, and make sure that they flow into our communities. So with that, again, just like Tom, I'm open for questions. I always enjoy the Q&A a little bit better than the presentation because there's an opportunity for a back and forth dialogue. So again, just looking forward to answering your questions.
Yeah, absolutely. Thank you so much, Colette. I think all of that is so helpful to think through those key steps. And I think you already spoke to this a bit around kind of managing the growth and the stability, but anything you want to add just briefly there before we turn to questions? I think you did a pretty good job of covering it, but just want to give you the opportunity if anything else comes to mind.
Yeah, just to reiterate, you're right about the growth and stability. Again, right now, and where we're at today, it is about survival. So again, not making the big bets. There will be an opportunity for growth. And that's where, when I was speaking to the innovative piece, right, that there's things that you're going to do during this crisis, this to survive, that you're going to be able to use when we get back to a normal state. So again, if you're a restaurant and you're only doing dine-in, now you've created an opportunity for you to be able to deliver, right, and do carry out. So, and then even for our technology companies, right, the ability to work virtually and create new products and solutions that allow for folks to be able to work virtually, right? So there's opportunities here. So, the growth is there. That's going to come through your innovation. But right now, when you talk about stability, it's about liquidity in your balance sheet, not making huge bets, but making kind of these small incremental changes that allow you to be able to sprint when the race opens back up.
Mm-hmm. Yeah, I think that makes a lot of sense. Thank you. So now we can open to questions from our audience who's with us live here. So folks, please navigate to the black toolbar on the Zoom window and find the chat button, and you can type in any questions that you have for our two panelists. For Tom and Colette, thank you again for being with us and for sharing these insights. I think they're really valuable. We've got a couple questions that have already come in, so I can start with those. But again, folks in the audience, please feel free to continue to type in anything that comes to mind, and we will share those back with our presenters. So our first question here, I think, Tom, you can probably help us think through this. When you were speaking about the economic changes that we've seen and sort of the outlook, one of our audience members, Cheryl, is wondering about elevated savings rates. It looks like she read a prediction that it might take quite a while for consumer spending to level back out because people are looking to save as a result of all of this uncertainty that we've been seeing.
It's a great question. Thanks for asking it. It's really interesting, at least to the econ nerd in me, that we saw a big spike up in the savings rate at a time when the unemployment rate went to the highest level in 60 some odd years. And I think what that tells you is that the government programs through the CARES Act have really, really helped keep small businesses kind of afloat, like Kalao was saying. So I think what we got with in March was we've got the Federal Reserve coming in and lowering interest rates and adding liquidity to financing markets to line up borrowers and lenders to kind of keep the nature of business in our country moving forward. But probably more importantly, Congress, who frankly have been at each other's throats for the last many years, over the course of a long weekend, came together as one group and put together a bipartisan CARES Act, which put about $2.7 trillion back into the economy. And put that in perspective, that is the most the biggest fiscal stimulus that our government has ever put together. It's larger than the fiscal stimulus that we got out of 08, 09. It's even larger than the New Deal back in the 1930s. And I think the point here was individuals got $1,200 checks, small businesses got forgivable loans if they kept people on their payroll. And what you saw was, all at the same time, the stimulus went out and most non-essential businesses closed. So there wasn't really the opportunity for the American consumer. The one thing we know about the American consumer is really, we're great at spending. We're not so great at saving. So it's a bit of an anomaly, I think, in those numbers that you cite. So we had this massive spike in the savings rate, which I think tells you two things, right? So one, the economy kind of shut down. There was very few options to spend discretionarily. And two, despite the massive move higher in unemployment, there was also a lot of stimulus out there, and the government was able to put money in the pockets of many, many consumers. Our expectation is that savings rate, as the economy, again, as that garden hose continues to open up, that savings rate that went to somewhere from about 8% to like 30%, is going to go right back down to kind of more normal levels that we've seen over the last few years. As long as these non-essential businesses continue to reopen and that we continue to see modest progress on the unemployment front. So our expectation is we're watching very closely the rate and the spread of the virus and cases, and because that will be the telltale sign on whether we can continue opening up the garden hose or not. And if the hospital systems are not overwhelmed, then our expectation is we're not going to see another shutdown, and that we're going to see unemployment kind of trickle down as more businesses reopen. And we're also going to see that consumer saving rate come down, which should translate right into consumer spending. And again, that is one of the key drivers of our economy. So we think it'll be a slow go. We think it's going to be in fits and starts. Again, that analogy from light switch to garden hose, we think is happening. But that savings rate, we think, is a bit of an anomaly because of all the stimulus measures that our Congress put out there to put kind of build a bridge to a better economic future for many individuals and small businesses. We think that's going to eventually be spent back down to normal levels. We don't think it's going to happen all in 1 month, but it's going to happen over time. And our expectation is probably by the fourth quarter of this year, or maybe the first quarter of next year, we're going to see spending rates kind of where we were prior to the pandemic hitting.
Okay, that makes a lot of sense. And I hadn't thought about that the combination of the stimulus hitting and people just on a very practical level had fewer opportunities to spend would naturally create a higher savings rate, that spike that you spoke about, Tom. So that's helpful to understand. Of course, as we continue to open up and it's safe to do so, people will naturally have opportunities to spend again.
That's right.
All right. Thank you for helping us think through that. At least from a small business owner perspective, I think that was encouraging that once those opportunities are back in play, people are likely to continue to be patrons of their local businesses. All righty. So we've gotten a few more questions that have come in here. One question that I think I can quickly answer, but of course, Kala and Tom, if you have anything to add, we had someone who is wondering about any grants available to small businesses to make sure that they have access to the supplies that the government is requiring in order for the business to reopen. Daycares and, dentists, nail salons, there's lots of high contact businesses that are required to have a certain amount of safety and health supplies on hand in order to reopen. So I think this is an interesting question. My advice, at least from Accion's side, what we've been telling folks is to look more to the local level, so state, county, and city grant and loan opportunities to help with those expenses. On the national level, we haven't seen anything that is geared specifically toward that, but there's more on the local level. But Kala or Tom, anything else to add about access to grant opportunities?
Yeah, I was going to say the exact same thing, Meredith, that at the federal level, we're not seeing that type of activity, but I know at the municipalities, at the local municipalities, there's a lot of different programs and grants, particularly for small businesses that are either trying to open or, to your point, being able to have some funds to have the adequate PPE and other things to keep their employees and their customers safe. So I will go to your local website, right, of the city or county that you're in, and look for those resources.
Great, thank you. All right, so actually this is a question that's kind of related that I think both of you may have sort of alluded to the expectation of any additional federal stimulus, or whether it's a new wave of PPP or a different unemployment benefit expansion or anything like that. I know it's all a bit just speculative at this point, but anything you can share about what we might be seeing at that federal level coming forward?
This is Tom. I'm happy to take this one. So you can turn on any of the national news media. There's certainly been lots of conversation about adding on to the CARES Act, adding more fiscal stimulus. And we think there is a bipartisan agreement out there somewhere. There are still some sticking points that Democrats and Republicans are going to be negotiating with each other over the next several weeks. But it's likely that there will be additional funds, particularly as we see some virus cases kind of rise nationally. I think there's going to be a bipartisan agreement that would help small businesses, help consumers, and potentially extend some of the unemployment benefits that are out there today. You know, this is also a political football. We are in an election year, and I don't think either party is going to stand in the way of helping out the citizens of this country try to get back on their feet. So our expectation is that you know, and I think Meredith, you said it very well, it's still speculative at this point, but all signs point to some more stimulus coming out of Washington. The specific way it's going to look, I think, is a little bit unclear at this point.
Mm-hmm. And probably the timing.
Yeah, I would agree with that. I mean, there's some programs. There's a Main Street lending program that's out now that very little demand, because I don't think it's really kind of hitting on what's needed. There's still about a little bit over $100 billion left with PPP. There's been conversations around either extending the June 30 deadline or even allowing companies that already applied, if you have under 100 employees, to be able to reapply again for a second line. So to Tom's point, you know, these things are being debated back and forth on Capitol Hill. They're getting tossed around, but I'm hoping that, you know, they'll get to a point that they actually land on something so we can continue to get the money out to the you know, employees as well as some of these small businesses. So
yeah, absolutely, I totally agree. One question related to this, how, I think Kalab, maybe you can help us with this. How, if at all, is Fifth Third Bank assisting with the SBA disaster loan? So there's, of course, the differentiation between the PPP program that goes through banks and then the SBA Economic Injury Disaster Loan Program. My understanding is that that goes primarily directly through the SBA, but is Fifth Third Bank involved with that at all?
No, yeah, you're absolutely correct, Meredith. That particular loan was directly, you go directly to SBA. So the way that we provide assistance there, as well as other banks, is that, you know, there's information on the website to help you get there, but it is a direct to SBA program, whereas PPP, you know, SBA 7A programs, SBA Express, other programs that are delivered, 504 program are delivered through the actual financial institution.
Got it. All right. So for the disaster loan, go straight to SBA. For practically anything else, go to your banker.
Right. The disaster loan and the disaster grant, because there's two. You know, you have the loan
right. Yeah.
and then the grant as well. And the grant, I would recommend everybody, just like I recommend everybody get a PPP loan right now that they extended it to 24 weeks. I also would recommend that if you have the ability to get the $10,000 grants as well through the EIDL, because that's money you don't have to pay back. So that's, you know, as close as we're going to get to free money.
Exactly. Alrighty. So now we've got two questions that have to do with advice for specific kinds of businesses, not overly specific, but I think Kalal, you probably are going to have some great insights here. So we had one question about businesses that deal with import-export. As we kind of look at the global economy recovering from this, any advice for businesses or if the bank's doing anything to support export businesses?
Yeah, you know what, I'll answer that question directly, but then Tom, I know that there's been a lot of discussions at the economic level around import and export and some of the challenges that are there now. But one of the things that we've tried to do, and again, this is all through the SBA. The SBA also has a program called the SBA Exim loan, which allows businesses that import or export to be able to have access to financing through SBA. So we try to work with borrowers around that, and then obviously if needed, we'll introduce folks to our foreign exchange folks and other areas of the bank that actually are experts in either foreign currency or just the ability to move funds around the world. So, Fifth Third is a full service bank and is based on the needs of that client that we can connect them to the right folks to help them facilitate whatever transaction they need to facilitate, or even give them advice around hedging or what have you.
Yeah, and this is Tom. To answer the question directly, I'm probably not the guy to give on the give advice on the import-export market itself, but tangentially, what we as a group have been really following, paying attention to, is this notion of reshoring of manufacturing supply chains. Over the course of the last 30 years, globalization has been the biggest trend. And one way that multinational corporations have been able to lower their overall input costs has been by moving factories overseas, whether it somewhere in the East typically, and the big player there is China. So what you saw a trend between 2000, 2001 through the mid 2000s was a massive movement of manufacturing, in particular supply chains, to China and other Asian countries. They're far, the wages that workers garnered were much lower in overseas than they were in the United States. They were more competitive, and to boost profits, many U.S. multinational corporations moved their supply chains overseas. What's happened in the last 10 years that it's not really talked about very often, anytime you hear the word manufacturing, whether it's on CNBC or the Journal or any financial publications, you hear that American manufacturing is dead, and that's actually incorrect. That's false. Between the years 2010 and 2019, the U.S. added about 1.4 million manufacturing jobs, and that's with the advent of massive new technologies that kind of displaced some traditional manufacturing type work. But again, for the last 10 years, the United States has been growing its manufacturing base. And over the last 4 years, it really first started with kind of the Brexit nationalist populist government movement in the UK. You've seen it in the United States since the 2016 election, and the current administration being very focused on America first. And then you had this trade war that the U.S. has been in with China for the last 2 years that really disrupted supply chains that were based in China. We've talked to countless of our Fifth Third banking clients in the manufacturing space that have had their supply chains in China or in the East. And over the last two and a half years, we hear this story over and over again. And it was very difficult to get raw materials or end products from Chinese factories. So that was a big disruption. And now you've had a similar disruption happening since the pandemic hit in January and February, where local domiciled manufacturers that had supply chains in China, they just could not get those raw materials or their finished products. So I think when you combine this nationalist populist movement, the trade war, the pandemic type disruptions, I think it's very likely that one of the trends that you see in the United States over the course of the next many years. And the last thing I should say is that American manufacturing has become far more competitive from a cost perspective relative to the rest of the world. When you put all of those things together, it seems to us that there's going to be this trend for many years to come for manufacturing to come back to the United States. I mean, we've heard some of the economists that we pay attention to saying the U.S. American Midwest is going to be the next emerging market. I think that would be a relatively a good bet. I think that's a long-term trend. It's certainly not going to start overnight, but we do see this happening, and it really has been happening under the radar for the last 10 years as manufacturing jobs have grown. So I know that doesn't necessarily answer your import-export question, but our expectation is in one of our kind of longer-term investable themes might be this reshoring of manufacturing to the United States.
Yeah, I think that's a fantastic answer in context. Thank you, Tom.
Yeah, I was going to say the same thing, man. If Tom put the disclaimer out there and you just did a nice tutorial on the world when it comes to global commerce. And I think to your point, that creates a significant amount of opportunity here in the United States, particularly as it relates to, like you said, manufacturing IT staffing, all those things that traditionally have been offshored are now coming back. And I think that just shows again that, the future is going to be pretty bright as we come out of this crisis.
I agree. All right, so one of the last questions that I think we're going to have time for today is also for a certain type of business trying to respond and kind of weather this challenge. So we have somebody asking a question about what advice you might give to small businesses who are just starting, not necessarily a traditional startup like in the technology space, but businesses that were starting to grow, starting to really see some promising signs right before the pandemic hit. So what do you see, Kala, in terms of the future for those newer businesses, maybe restaurants or retail, that were just getting started right when all of this happened?
Yeah, I think the big thing, and I know this is going to be an obvious answer, which is to stick with it, right? And don't give up. So there's been a lot of businesses that we finance because we do a lot of franchises across the country, actually. And a lot of them didn't get started, right? They were still in, it wasn't a startup, but they were just starting to build some momentum and they literally had to shut down. So one of the things that we're seeing these businesses do is that they're trying to figure out how they retool it again. How do they take advantage of the kind of the new normal when we come back, right? So again, it's giving them the opportunity to rethink their business model and again, to be more innovative and create other ways to earn revenue that probably wasn't there when they initially started their business. So stick with it and try to get as creative as possible on how you can come back even stronger. But definitely don't give up.
I think that's great advice. And certainly for this audience, it resonates very well with entrepreneurs are very perseverant, hardworking folks. So thank you very much. Alrighty, so it looks like those are all of the questions that we received from the audience. And I want to thank everyone who joined us today for spending time and learning with us about these really important themes and issues that are going to help you make your business even stronger coming back from this. Kala and Tom, I also want to thank both of you for spending time with us and sharing your insights. I think it's really important to learn from experts like the two of you. So I appreciate both of you taking the time out today to talk with us.
Thank you for the invite, Meredith. It was a lot of fun.
Yeah, same here.
Great.
Pleasure.
Thank you very much. And everyone be on the lookout for the email with the recording of this webinar so you can listen back to all of the insights that we spoke about today. And we will see you next time on the next webinar. Thanks for joining. Have a good day.